In this video, we are going to be analysing Coinbase ticker Coin. If you want your own stock analysed, throw that in the comments. We'll get around to it when we can. Now, we can see we're down about 15% on the day. Why is this? So the SEC did charge Coinbase for illegally operating an unregistered securities exchange. So that's the big catalyst. Now, what are going to be the key levels? So obviously, if we're day trading, we'll usually just be paying attention to between these. This is the 2-day anchored VWAP. This is the normal VWAP, the VWAP most people use. So usually when you're within this range, not something I like to be trading. If we're waiting for a more directional move, again, if we can break above the 2-day anchor VWAP, test it as a support, then good chance we can continue to the upside. And if we want to trade this to the downside, I'd rate for a more bearish move, meaning we break below the today's VWAP, retest it as a resistance, and again, if that holds, then we could look more short bias on the stock. But to go over to the key levels, especially if we're looking at swing trading or investment opportunities, what are going to be these key levels? So again, we can see we're currently sitting around $50. Now on the left we have a 6-month, on the right we have a 1-year chart. Now we can see our first deviation on this 6-month is at $47.90, and our first deviation on the 1-year is at $43.90. So this is what you consider the first deviational range. Now, if we're looking at it from an investment standpoint, really anytime we can get in below statistical mean, so below $59, is going to be a good value. But ideally, we want to be buying at this range, or it's going to be coming down to our second deviation range, which we'll cover in a second. So if we're looking at investments, again, these are usually going to be the key times that if we're looking to buy it, these are the times we want to be buying it. Now, from a trading perspective, if we're a reversal trader, the first time we hit into this level, we're really looking for that bounce. And that's why we kind of dipped into this level a bit. We're getting that potential bounce. Again, we need to kind of see how it reacts to the intraday VWAP and the 2-day anchored VWAP to kind of see where this move will go. But if we're able to break that 2-day VWAP, definitely could look for kind of a pre-gap move of around $56 to $59. But again, there is a catalyst, so it's probably not something I'd be banking on. It would be more of a shorter term trade if I'm looking to trade this bounce. Now again, that is a key range, so we could potentially come down lower and come down all the way to $43.90 and test that level. Now if we start to break that, we're going to be even further down supports. So if we do break that, we're then looking at $36.75 down to $31.40. Again, this is our next range, and like we said, whether you're trading or investing, this can be a key level. Obviously, if we're investing, this is just a good range in general to be looking at buying. Again, make sure you've done your own due diligence on the stock if you're holding something long term. The price you get in isn't everything. It's where should it be valued? Does it align with your investment goals and everything like that? But if it's something that you're looking to buy in and now you're just waiting for that buying point, again, this could be a good area to be waiting for. And now as a reversal trader, this again is going to be another key level. If I'm holding this stock short bias, this will be a key target. If I'm a reversal trader, not a trend trader, then again, looking for that bounce off here with a first target going around that first deviation, which will be around $43, $44. Now onto the final set of supports. These will be really key. Really, if we can come down to here, probably something I'll even be looking at buying up myself, because this is our third deviational range. That's between the $19 and $25 range. So again, quite a big range. Probably wouldn't even use them as a range. Just look at them as individual levels, so the 25 and the 19 separately. But if we come into either or both of these levels, again, this is when you consider a stock extremely oversold. So if we're looking at investment, and again, we've done our due diligence, definitely a level to be looking at potentially buying. Now, if I'm looking at it from a trading perspective, again, I'll probably get in here 9 times out of 10. I'll get in when it hits these third deviations, looking for that bounce. I'll go in though with defined risk. So if it does continue its strong trend, then obviously no harm. Well, we just lose what our defined risk is. But if we get that bounce, we can usually look for kind of at least a 1 to 2, sometimes a lot more on the upside move. Now, onto the resistances, I don't think they're going to be too key now, considering we have had a negative catalyst and we are moving to the downside, so these ranges will be more key. But if we did push to the upside, we did talk about the $56 and the $59 level. This is statistical mean. This is considered fair value. This isn't a level we trade off of, but a level we trade to. So if we were holding long below this level, that's going to be our target. And for any reason we're short above this level, that's usually going to be our final target. I never look to really hold a position going through this range, because to me it turns more to a gamble past that range. Now, key resistance, we'll just note the first one just in case we did get a pop or anything, and that'll be around $69 to $70. Again, key range there. If we did break that high, that's the resistance, but again, looks like we're going to be really continuing down more than we are to the upside as of right now. Thank you for watching. If you enjoyed the video, you will probably enjoy this video too.